Welcome to Target the Trade. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing a really great opportunity in the British pound. But before we start, make sure to like and subscribe and share so that you can help this channel grow and that you can get future content like this. So the British pound, let's take a context, a historical look at the British pound. Now the British pound is obviously the remnants of the Great British Empire. Now, I don't want to get into so much of history, but obviously, if you've done a little bit of history, you know that the British Empire did exist and they had tremendous influence on the world. Now, the remnants of that is what we have today as the United Kingdom. So just looking at it, it's one of the stronger, between the US dollar, between the euro, the Japanese yen, the Swiss franc, it's one of the stronger pairs that I would say is out there, okay? So that's number one. Number two, it's economic, demographic, political impact on the world is there. Now, because Great Britain has gone through some tremendous cycles, okay? We saw from last year to this year even some tremendous cycles. But over the past 10 years, okay, we don't have to look at tremendous 100-year history, but over the last 10 years, we've seen some tremendous history unfold for Great Britain. Number one, Brexit happened. They were part of the EU, they were going to integrate part of the EU, and then they stepped out. That had a major influence on the British pound. Number two, last year, the dollar versus the British pound traded at 1-to-1 for the first time. Okay, it even dipped a little bit below if I remember correctly, but for the first time in history. That means the Great British pound, which was usually 180, okay, or 150 even, to the dollar, went 1-to-1. And I mean, most of the time it traded maybe between 130 to 125, maybe 140 even, but that's generally, historically speaking, over the last 10 years where we were trading. And that was more attributed to more economic regulatory standards that were changed in the United Kingdom that led to that. If you remember, last year there was a tumult with the Prime Minister and she was ousted, and then came in the new Prime Minister, reinstated the original economic standards, and then the British pound shortly after that started recovering, and it just was, initially it went from 1 to 110, and then 115 to 120, and now it's looking like it's perking up again. Now, because of that, there are two characteristics that are really important for a trader when it's looking as a potential trade. So, and the British pound has two of these very strong characteristics. It's like getting to know an asset before you trade it. You have to know its temperament. You have to know like what it's about. And the British pound has two aspects to it that are very unique. Number one, it's volatile, which means that if the euro was to go 50 pips on a move, the GBP would go somewhere where 100 pips on a move. It's much more volatile. With greater opportunity comes greater risk, right? The old Chinese proverb. Now, with that said, that means if you have greater reward, you also have greater risk, which means you've got to be much more careful and much more conservative when it comes to taking stop losses. Make it tighter, okay? And the reason I say this is because I've seen this not once, not twice, not three times. People get hurt just unnecessarily with not knowing the characteristic of the particular asset they're trading. That's number one. Number two, because it's volatile, you have to be that much more precise in your entry points. That much more disciplined to wait for the trade to come to you before you jump into it. That has to be that much more precise. Okay, so those are two aspects of volatility. The second aspect of it's that it's very strong. The first one to go up versus the US dollar is the British pound. Okay, if the euro responds to the dollar or the British pound responds to the dollar, it's usually the British pound that is much stronger. So I have already, okay, two aspects to it that gives me one up on trading it. Now there's another part to this of being strong is that even if you don't have the perfect entry, as long as you're trading the perfect side, okay, of that entry, you have put yourself in that greater element of probability in your favor. Remember, trading is all about probability. And if you do that, if you're trading an asset that is generally strong and you're buying it, most of the time it's going to go up. Okay, It's just a probability. It's not even an entry or a technical indicator or a crossover and nothing. It's just a probability. So keep that in mind as well. All right, so let's just jump straight into it. This is a weekly chart of the GBP. Okay, so it includes Brexit. There are 3 lines here besides the Japanese candlesticks. There's the white line, which is the 200-day moving average, which is very relevant because we're looking at a weekly chart. And then there's 2 other lines. They're a little bit more subtle. The blue line is the 30-day moving average, and you have a red line that is the 8-day moving average. And when you get this crossover and this unfolds, it becomes very important, okay? So as we look at this, okay, initially we crossed over the 200-day moving average, okay, which was a first thing that is happening. And then we sold off aggressively. Now this happened last year when we were parity to the dollar 1-to-1. Now at the point that we corrected ourselves, okay, which is right there, we saw that the red, okay, which is the 8-day moving average, cross over the blue 30-day moving average, and that was my point of interest. That was when I said, okay, this thing is changing. This is becoming much stronger. And as that is progressing, we also developed not just a crossover, but also a technical indicator on a 4-hour chart that kind of gave it away, okay? And this is it. This is the 4-hour chart of the same thing, okay? And we're just focusing on this element. We're getting the crossover, right? And then we have what's called a upside down head and shoulder. This is the head, this is one shoulder, and this is a second shoulder. And the upside down head and shoulder is, generally speaking, a very bullish formation. And what happened right after that? Sure enough, we took off, okay? And we've crossed over on the upside and closed on a weekly chart the 200-day moving average. That was our goal. So now it has, for the first time, crossed over the weekly, okay, the 200-day moving average on a weekly, which is very important. Suffice it to say, after it did that, 129, it went up to 130, okay? And that is a like all the stars aligned kind of trade because everything was there. It had the crossovers, it had the technical, okay? And the character of it is that it's very strong, and that was just a layup, okay? And we've been following this in the daily review, and we discussed it, and this has been like something that we've been following, and this is the outcome of it. Thank you for joining me for Target the Trade. We'll see you here next time.